Is the Tata AIA Fortune Guarantee Secure Plan truly a guaranteed path to financial fortune or just a safe but slow moving option? Let us find out through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand a few basic details about it. So this is an individual, non-linked, non-participating life insurance savings plan. Some of the key features of the policy are it offers you flexibility to select from 4 variants tailored to your financial goals. You can start receiving income just 3 days after policy issuance, which is ideal for meeting immediate financial needs, and you can also grow and manage your income through the sub-wallet feature with the freedom to withdraw funds as required. And if you are a woman policy holder, you get to receive a 2% discount on the first year's premium, and you can use survival benefit payouts to offset future premium payments, and you can also avail tax advantages on premiums paid and benefits received as per the prevailing tax laws. So there are benefits like maturity benefit and death benefit, which will differ based on the plan option you have opted for. Now, some of the advantages of this policy are you get policy loans which are available up to 80% of the surrender value, offering liquidity during emergencies. You can enhance your base policy coverage by adding suitable riders, and for plan option 3 and 4, maturity benefits can be received in equal installments over 3 to 5 years instead of a one-time lump sum payout. And you can choose to receive your survival benefits on a personally significant special date instead of the policy anniversary. And you can opt to credit full or partial benefits to your sub-wallet with the freedom to withdraw either partially or fully at any point during the policy term. Under option 4, future premiums can be adjusted against the receivable survival benefits. So these are some of the advantages of the policy. However, the disadvantages are this plan yields lower returns compared to other long-term investment avenues, making it less suitable for wealth creation, and life insurance coverage does not extend into the income benefit period, reducing overall protection. So the annual income payouts may be easily diverted towards non-essential expenses, reducing their long-term utility. Periodic payouts hinder the power of compounding, limiting the growth potential of your investment. Also, the life cover provided under this plan may fall short of meeting your family's financial needs in your absence. So these are some disadvantages that you need to consider before deciding to invest in this policy. So now, as we have a basic understanding of this policy, let us move on to the analysis part of the video. So here we are going to calculate the internal rate of return of this policy based on the benefit illustration given in the policy brochure. So to calculate the IRR, we are going to assume that a 30-year-old male opts for this plan with a sum assured of 10.5 lakhs. So he has chosen option 3, regular income plus, with a policy term of 15 years and a premium payment term of 10 years, paying 1 lakh annually. So under this option, he receives a guaranteed annual income of 1.25 lakhs for 20 years, starting after the premium paying term, along with a lump sum of 10 lakhs at the end of the income period. So if you calculate the IRR for this cash flow, the return works out to be 5.69% as per the policy's maturity calculator. While the regular payouts might seem appealing, they disrupt the compounding process, leading to suboptimal long-term growth. Additionally, the sum assured is insufficient to serve as a meaningful financial safety net. In summary, despite its guaranteed payouts, this policy offers low returns and lacks the efficiency and flexibility of other long-term investment options, making it a less attractive choice for serious investors. So now, as we know that this policy is not giving us a desirable outcome that we need, let us now move on to the comparative analysis, where we are going to compare this policy returns with an alternative strategy returns. So instead of combining insurance and investment into one plan like Tata AIA does, we are going to separately invest in both just to see whether it can give us potentially efficient returns. So here, for life cover purpose, we have opted for a 15-year pure term life insurance policy with a sum assured of 10.5 lakhs, which cost us approximately 5,600 rupees annually for a 30-year-old male. So the remaining 94,400 rupees from the original 1 lakh premium we paid for the Tata AIA policy is going to be invested each year for 10 years. So you can assume the investment is going to be in an equity mutual fund based on moderate to high risk appetite. So at the end of 15 years, the mutual fund corpus, which is the post-tax, grows to approximately 29.94 lakhs. So this corpus is then shifted to a low risk instrument yielding 7% per annum, from which 1.25 lakhs is withdrawn annually for 20 years, matching the income benefit of the Tata plan. And the remaining amount is withdrawn at the end of the 20-year income period to match the lump sum maturity benefit. So the IRR of this approach works out to be 8.55%, significantly higher than the 5.69% IRR offered by the Tata AIA policy. Moreover, if the investor allows the corpus to compound without taking annual withdrawals, the final wealth accumulation would be even higher, demonstrating the power of uninterrupted compounding. Splitting insurance and investment, opting for a term policy for protection and mutual fund for wealth creation not only offers you with better returns but also greater flexibility and transparency. Traditional bundled plans like Tata AIA may appear attractive due to guaranteed payouts but fall short in terms of long-term value and inflation beating potential. So what is the final verdict then? Is investing in the Tata AIA Fortune Guarantee Secure Plan worth it or not? So this policy provides the flexibility to receive regular income either immediately or after the premium paying term, along with a lump sum benefit at maturity under specific variants. Based on individual income needs, policyholders can choose the appropriate option to customize their cash flow. However, beyond this flexibility, it functions like a traditional savings plan with limited wealth creation potential. While the immediate or deferred payouts are promoted as key benefits, in the world of investing, longer investment horizons typically yield higher returns due to the power of compounding. Unfortunately, this plan falls short with its below average IRR and relatively low sum assured, making it less appealing for serious investors, and it also has a high agent commission. A more effective strategy for financial planning involves opting for a pure term life insurance policy with adequate coverage for financial protection and channeling the remaining funds into goal-based investments such as mutual funds or other market-linked instruments. So the separation of insurance and investment not only improves overall returns but also provides greater flexibility and control over your financial journey. For those seeking regular income, building a diversified investment portfolio is a more efficient and scalable alternative than relying on traditional insurance products.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.